Imagine waking up knowing that every decision you make could move billions of dollars or crash entire economies. This is the world of hedge funds, secretive, powerful, and often misunderstood. Today, we're diving deep into one of the most mysterious money machines on Earth to uncover how hedge fund managers make their insane profits, how they survive market chaos, and why some of them end up rewriting the rules of global finance altogether. It all starts with one simple question. How do the ultra-rich keep getting richer, even when the markets collapse? Our story begins in a glass skyscraper overlooking Manhattan Floor 52, where the air smells like espresso and the hum of servers never stops. Inside, hundreds of screens glow with charts, numbers, and data streams. Every flicker of green or red represents millions of dollars moving through the system. And somewhere in this maze of information sits Peter Hale, a 32-year-old financial analyst who just landed his dream job at one of the most powerful hedge funds in the world. Peter always believed finance was about strategy, intelligence, and patience. But the moment he stepped into this place, he realized it was something else entirely. This was a world where seconds meant millions, and fear was a luxury no one could afford. His boss, Lena Chen, one of Wall Street's most respected hedge fund managers, once told him, "We don't predict the market, Peter, we move it." That line stuck with him, because here, money wasn't just earned, it was engineered. To understand hedge funds, you first have to know what they really are. In simple terms, a hedge fund pools money from the ultra-wealthy investors, corporations, even pension funds, and invests it in nearly anything that promises a return. Stocks, currencies, commodities, real estate, or even bets on global events, nothing is off limits. But what sets hedge funds apart is their mission: to make money no matter what happens. When markets rise, they profit. When markets crash, they profit too. That's the essence of hedging never lose. Peter learned fast that success in this world wasn't about playing it safe, it was about being first. To do that, hedge funds use every weapon in their arsenal: data-driven models, artificial intelligence, insider insights, and lightning-fast algorithms that can execute thousands of trades in the blink of an eye. Every day felt like a battle against the market and against every other hedge fund trying to outsmart it. One late night, Lena called Peter into her office. "You ever shorted a stock before?" she asked. He hesitated. "Not on this scale," he admitted. She smiled. "Good, because we're about to make one of the biggest short plays in the firm's history." They were betting against a major tech company whose numbers they believed were inflated. The fund borrowed shares, sold them instantly, and waited. When the company's earnings report came out, it was worse than anyone expected, and its stock price fell off a cliff. Within hours, the firm made $200 million. Peter stared at the screen in disbelief. "We just made more in one day than my parents will in their entire lives," he said quietly. That was the moment it hit him. In the world of hedge funds, money didn't feel real. It was just numbers on a screen, but numbers that could change everything. Yet, behind the glamour, the risk was enormous. When hedge funds fail, they don't just lose, they implode. Take long-term capital management in the 1,990 seconds, a fund run by Nobel Prize-winning economists who thought they'd built a system that could never lose. Using extreme leverage, borrowing 30 times more money than they had, they made small, steady profits until the day Russia defaulted on its debt. Overnight, they lost billions and nearly took down the global financial system. The US government had to step in with a $3.6 billion rescue just to prevent total collapse. Peter started wondering if the system was built on brilliance or just arrogance. To find answers, he sought advice from Ray Dawson, an older trader who had survived more market crashes than most analysts had years of experience. Over a cup of coffee, Ray told him, "Kid, hedge funds are like sharks. They keep the ocean clean, but they'll also eat you alive if you don't keep moving." Peter laughed nervously, but deep down he knew Ray was right. Hedge funds have shaped markets for decades, sometimes for good, sometimes for chaos. They've exposed corruption, uncovered corporate lies, and forced industries to change. But they've also profited from crises, recessions, and even national debt collapses. For example, in 1992, investor George Soros made $1 billion in a single day by betting that the British pound would fall. He was right, and the British government had to surrender to the market. That trade made him a legend and a villain. But by the 2020 seconds, the game was changing again. Artificial intelligence had entered the scene. Hedge funds like Renaissance Technologies began using AI algorithms that could analyze patterns humans couldn't even see, predicting market behavior before it happened. Peter once watched the firm's AI system make 14,000 trades in under a minute, each one optimized to perfection. "It's like the market is alive," he whispered. "No," Lena said softly. "It's like we gave it a mind of its own." Still, the system had one flaw. It was designed so hedge fund managers always won. Their secret, the 2 and 20 rule, They took a 2% management fee guaranteed and 20% of all profits. So even if investors lost money, the managers still walked away rich. It was capitalism's most perfect business model. Zero losses for the players who built the game. Peter couldn't stop thinking about it. He came from a small town in Ohio, raised by two teachers who worked their entire lives just to own a modest home. They taught me that hard work pays off, he thought. But here, it's not about working hard, it's about knowing where the money moves. That realization changed everything. He began asking questions the kind people in his position weren't supposed to ask. Questions about ethics, transparency, and the real impact of what they were doing. Because behind every billion-dollar win, someone, somewhere, was losing. So Peter started documenting what he learned. Quietly, late at night, he recorded short videos explaining the world of hedge funds in simple language, not exposing secrets, but explaining truths. He talked about how leverage works, how short selling actually functions, and how everyday people could protect themselves by understanding the system. Slowly, those videos gained traction. What began as curiosity turned into a movement. People wanted honesty, and Peter gave it to them. Lena eventually found out. She wasn't angry. "You're not wrong," she said. "People deserve to understand. Just be careful, transparency isn't something this industry likes." But Peter didn't stop, because he realized something that every billionaire, every investor, and every fund manager eventually learns: money isn't power, understanding it is. When he left the hedge fund years later, he didn't take a golden parachute or millions in bonuses. He took knowledge, and with it, the determination to make finance something ordinary people could finally see for what it really is. So, the next time you see headlines about hedge fund billionaires, market crashes, or financial scandals, remember, behind the numbers are real people. Some chasing success, some chasing meaning, and some, like Peter, finally choosing truth. Because maybe the real secret to making money isn't in predicting the market. Maybe it's in understanding that the game was never about money at all, it was about who controls it.